This is an emergency broadcast. And before we even start looking at the charts, I need you to do me a favor. I need you to go to your wallet, pull out a dollar bill, and look at George Washington's face. Look closely. Does he look disappointed? Does he look like he knows his legacy is being traded for cheap plastic crap and bad decisions? Because he should be. If you still think that piece of green paper in your hand is money, you're about to get a lesson in physics that is going to hurt. I need you to put down the remote. I need you to stop scrolling TikTok for cat videos. Because the cats are fine, the financial system is not. We have officially entered a phase of the collapse that historians will write books about. They won't call it a correction. They won't call it a recession. They are going to call it World War Silver. Ladies and gentlemen, Asian guy here, known as John A.G. from Currency Archive. It is Tuesday, January 27th, 2026, and the battlefield is no longer theoretical. It is mathematical. We are witnessing a dislocation in the global markets that shouldn't be possible. In a normal world, in a world where markets are efficient and connected, the price of an asset should be roughly the same everywhere. An iPhone costs the same in New York as it does in London. A barrel of oil costs the same in Texas as it does in Tokyo, give or take a few dollars for shipping. But today, the laws of economics have been suspended. We are looking at a split reality. I need you to look at the two numbers that define this war. In New York, on the COMEX, the paper casino run by the Western banks, the price of silver has been smashed down. They hammered it overnight. They threw every short contract they had at the wall. The price on your screen is hovering around $106.15. If you're a Western investor, you are panicking. You're thinking, oh no, it crashed. The bubble popped. Wrong. You are looking at the fake price. Now let's teleport 7,000 miles to the east. Let's look at the Shanghai Futures Exchange. Let's look at the market where people actually take delivery of the metal because they need it to build solar panels and missiles. The price in Shanghai is $126.95. Do the math with me. 126 minus 106. That is a difference of $20.80. That is a 20% premium. In the world of arbitrage, a 1% spread is a fortune. A 20% spread is a supernova. It is a financial black hole. It is a vacuum cleaner the size of a continent. Do you understand what this spread does to the physical supply chain? Imagine you are a silver refiner in Switzerland. You have a 1,000-ounce bar of silver sitting on your desk. You have two phone lines ringing. On line one, it is a banker from New York. He says, I will give you $106 for that bar. On line two, it is a trader from Shanghai. He says, I will give you $126 for that bar. Who do you sell to? You don't need a PhD in economics to answer that. You sell to the guy paying $20 more, you hang up on New York, you block their number, and you put every single ounce of metal you have on a plane to China. This is the mechanism of the drain. This spread guarantees that the Western vaults will be emptied. It guarantees that London, New York, and Toronto will be stripped of their physical assets. The metal flows to the highest bidder, and right now, the highest bidder is the Chinese Communist Party. They are effectively sucking the wealth out of the West, ounce by ounce, bar by bar. And the brilliant bankers in New York think they are winning because they managed to smash the paper price down to 106. They are celebrating a Pyrrhic victory. Look, we lowered the price. Yes, you lowered the price, but you also ensured that you will have zero inventory left by next week. You are holding a sale at a store that is about to go out of business. This is not a market inefficiency. This is World War Silver. This is a deliberate economic attack. Beijing knows exactly what it is doing. They are looking at the US dollar, which is crumbling, which we will talk about in a minute, and they are saying, we don't want your paper anymore. We want your stuff. They are using the arbitrage to repatriate the world's silver supply to the east, and the West is letting them do it because the West is addicted to lower prices to mask inflation. But why is this happening now? Why did the spread blow out to $20 overnight? Because the dam holding back the US dollar has finally broken. The arbitrage bomb is just the symptom. The disease is the currency itself. We need to talk about the DXY. We need to talk about the dollar index crashing below 96. Because while you are worrying about the price of silver going down in dollars, the rest of the world is worrying about the dollar going down in everything. The floor is falling out from under the reserve currency. Let's go to part two. You cannot understand the war in the silver market until you understand the battlefield. And the battlefield is the US dollar. For 80 years, the dollar has been the North Star of the global economy. It was the constant. It was the ruler by which we measured everything else. But today, the ruler is shrinking. The North Star is burning out. We have just witnessed a technical breakdown that signals the end of the dollar's hegemony, the DX. Why? The dollar index, which compares our currency to a basket of foreign rivals, has just smashed below the critical support level of 96. It is currently trading at 95.8. This is not a dip. This is a structural failure. Year over year, the dollar is down 10.7%. That means if you held cash in a savings account for the last 12 months, you lost 10% of your global purchasing power without spending a dime. You were robbed in your sleep. But to see the true damage, you have to look at the real money pairs. Look at the Swiss franc. The dollar is down 14.1% against the franc. Look at the euro. The dollar is down 12.15%. The world is dumping the dollar. Central banks in Asia, sovereign wealth funds in the Middle East, and pension funds in Europe are all hitting the sell button at the same time. They are rotating out of the unipolar reserve currency and into a multipolar basket of assets. And what is the one asset that is neutral? What is the one asset that has no counterparty risk? Silver. Now, I know what you're going to say, but Asian guy, the stock market is at an all-time high. My 401k looks great. I need you to stop looking at the number and start looking at the value. Yes, the S&P 500 is making new highs, but let me ask you a question. If the Venezuelan bolivar collapses, does the Venezuelan stock market go up or down? It goes up. It goes to the moon. In 2018, the Caracas Stock Exchange was the best performing market in the world. It went up thousands of percent. Did the people get rich? No, they were eating rats in the street. And the stock market went up because the currency went to zero. That is exactly what is happening in New York right now. The highs in the S&P 500 are an illusion of inflation. You're not making profit. You're just running to stand still. You are preserving your purchasing power against a dying currency, but you're not gaining wealth. The only people gaining wealth are the ones holding the asset that the dollar is priced in. This collapse of the DXY is the green light for Beijing. China has been waiting for this moment for a decade. They have watched the U.S. weaponize the dollar. They have watched the debt spiral out of control. And now that the DXY has broken 96, they know the U.S. is vulnerable. They know the Federal Reserve is trapped. If the Fed raises rates to save the dollar, they crash the economy. If they lower rates to save the economy, they crash the dollar. It is checkmate. And China is seizing the board. They have launched a strategy that is so simple yet so devastating that the Western bankers have no defense against it. They are not fighting with missiles. They are fighting with premiums. They are printing their own paper currency to drain our physical vaults. We need to talk about the Shanghai strategy. We need to explain how they are weaponizing the yuan to steal the American silver supply. This is the part of the story where we have to give the devil his due. We have to look at the strategy coming out of Beijing and admit that it is brilliant, it is ruthless, it is predatory, it is an act of economic warfare, but it is brilliant. You see, most people in the West think that the $20 spread between Shanghai and New York is a glitch. They think it is a temporary market error that will fix itself. They are wrong. This spread is not a bug. It is a feature. It is a weapon system. We need to talk about the Shanghai strategy. Here is what the Chinese Communist Party has realized. They are sitting on a mountain of U.S. Treasury bonds, debt that is rapidly losing value as the dollar collapses below 96. They are also sitting on their own printing press, which can print infinite Chinese yuan. So what do you do if you are Xi Jinping? Do you wait for the West to default on its debt? No, you launch a resource raid. You deliberately allow, and perhaps even encourage, the price of silver in Shanghai to trade at a massive premium to the rest of the world. You let it hit $126. Why? Because you know that the Western banks, in their arrogance, will try to suppress the price in New York to $106 to hide inflation. This creates the perfect trap. By keeping the price high in Shanghai, China turns its entire economy into a giant vacuum cleaner. They are effectively saying to the world, we will pay you more than the Americans. Bring us your metal. And the market obeys. We are seeing reports of bullion dealers in London, refiners in Switzerland, and wholesalers in Australia diverting their shipments. Ships that were supposed to go to New York are turning around in the middle of the ocean. Planes are changing their flight plans. Why would anyone sell to the COMEX for 106 when they can sell to the Shanghai Gold Exchange for 126? Capitalism is doing Beijing's dirty work for them. The invisible hand of the market is stripping the United States of its strategic reserves and handing them to its greatest geopolitical rival. And here's the genius of the trade. China is paying for this metal with yuan. They are paying with paper currency that they can print for free. They are trading paper dragons, fiat currency backed by nothing, for silver atoms, a strategic metal required for solar panels, electric vehicles, and cruise missiles. They are trading the infinite for the finite. They are giving the West the paper, and they are taking the rock. When the music stops, when the currency reset finally happens, who is going to be the winner? The country with the pile of paper money, or the country with the pile of silver? The answer is obvious. This is why I call it World War Silver. It is not a war of bullets, yet. It is a war of inventory. Beijing has calculated that if they can drain the COMEX, they can break the US dollar's pricing power forever. If New York has no metal, New York cannot set the price. The pricing power shifts to the east. The London fix becomes the Shanghai fix. And suddenly, the United States is no longer the master of the financial universe. It is just another country asking for a price quote in a foreign currency. This $20 premium is the artillery barrage. It is pounding the walls of the COMEX, and the walls are cracking. The vault data proves it. The inventory is bleeding out. But the empire is not going to go down without a fight. The banksters in New York see what is happening. They see the drain, and they have just launched a counterattack. It is a desperate, dirty, and dangerous move designed to stop the bleeding by force. They couldn't find more metal, so they decided to attack the traders instead. We need to talk about the margin hike. We need to talk about the $51,000 gun they just put to the head of every silver bull in America. Let's go to part 4. Let's look at the empire striking back. This is the part of the broadcast where we expose the dirty tricks. Because when you're losing a war, when your currency is collapsing and your vaults are being raided by a foreign superpower, you don't play fair, you cheat. You change the rules of the game in the middle of the fourth quarter. And that is exactly what the CME group, the owners of the COMEX, just did. The empire is striking back. And they are striking back with the blunt force trauma of a margin hike. We have just received a breaking alert from the Exchange Clearinghouse. Effective immediately, the margin requirement to hold a single contract of silver has been raised to an absolutely staggering level. They have hiked the maintenance margin to $51,977 per contract. I need you to understand how insane that number is. A standard contract represents 5,000 ounces of silver. Usually, the margin, the down payment you need to put up to control that metal, is around $10,000 or maybe $15,000. It allows traders to use leverage. It allows the market to have liquidity. But by jacking it up to $51,000, the COMEX is effectively detonating a nuclear bomb in the paper market. Here's how the weapon works. Imagine you are a hedge fund manager or a speculator. You're holding 100 contracts of silver because you know the price is going to the moon. Suddenly, you get an email from the exchange. They tell you that by the close of business today, you need to wire them an extra $3 million in cash to keep your position open. You don't have $3 million lying around. You are fully invested? So what do? You have no choice. You are forced to sell. You have to liquidate your position, not because you want to, but because you can't afford the new entry fee. This creates a wave of artificial, forced selling. It creates a liquidation cascade. Thousands of traders are puking their positions at the same time. And what happens when everyone sells at once? The price crashes. This is why you see the paper price in New York smashed down to $106. It is not because supply and demand changed. The demand is higher than ever. It is because the exchange rigged the margin rules to force the price down. They are trying to paint a red candle on the chart. They are trying to scare you. They want you to look at the screen, see the price drop, and think, oh no, the rally is over. I better sell my physical stack. This is a psyop. It is psychological warfare designed to break the spirit of the Western buyer. They want to crush the paper price so that the arbitrage window closes. They are hoping that if they smash New York to 106, eventually Shanghai will panic and drop too. But here's the flaw in their plan. Here is why this strategy is doomed to fail. China does not buy on margin. The People's Bank of China does not use leverage. The industrial buyers in Shanghai are not speculators. They are cash buyers. They pay 100% upfront. So when the COMEX raises margins, it hurts the New York speculator, but it does absolutely nothing to stop the Shanghai vacuum. In fact, it makes it worse. By smashing the price to 106, they have just made American silver even cheaper for the Chinese to buy. They have effectively put the on-sale sign up for Beijing. Come and get it. We just lowered the price by another $5 for you. It is a suicidal strategy. They are burning the furniture to heat the house. They are destroying the paper market's liquidity just to survive one more day, but they know they can't hold this forever. So they have launched a second front to this war. They are not just attacking the price, they are attacking the narrative. We are seeing a coordinated, funded smear campaign across social media. Influencers who haven't talked about silver in 5 years are suddenly making videos telling you it is a bad investment. They are telling you it is illiquid. Meanwhile, the biggest refiners in the world are saying the exact opposite. We need to talk about the lie versus the reality. We need to talk about what PAMP Suisse just admitted in a leaked memo. This is the part of the war that is fought not with money, but with words. We have talked about the arbitrage bomb. We have talked to the margin hike. But now we need to talk about the propaganda war. Because when the powers that be cannot fix the supply, when they physically cannot dig enough metal out of the ground to meet the demand, they have to kill the demand. They have to make you not want the metal. And right now we are witnessing a coordinated, well-funded, and frankly desperate smear campaign against silver across every major media platform. I want you to open your phone. I want you to look at the financial news feed. What do you see? Suddenly, out of nowhere, you have experts who haven't mentioned precious metals in 20 years coming out of the woodwork to bash it. You have articles on Bloomberg and CNBC with headlines like, "Why Silver is a Trap for Retail Investors." The liquidity myth, why you can't sell your bars. Is silver the new pet rock? Do you think this is a coincidence? Do you think that in the middle of a currency collapse, all these journalists just coincidentally decided to write hit pieces on the one asset that is protecting people? No, this is a script. They are terrified. They know that if the American public wakes up, if even 1% of the retirement money in this country moves into physical silver, the game is over. The COMEX breaks in an afternoon. So they have to scare you. They have to gaslight you. They have to look at the screen where the price has been manipulated down to $106 and say, "See, it's crashing. You better sell now before it goes to zero." But here is the rule of thumb for surviving an information war. Ignore the pundits. Listen to the plumbers. Don't listen to the guy wearing a suit on TV who sells paper derivatives. Listen to the guy wearing a hard hat who melts the gold and silver. Listen to the refiners. Because while the media is screaming sell, the biggest refiner in the world is screaming, "We are empty. We have just received a leaked internal memo and public confirmation from PAMP Suisse." For those who don't know, PAMP is the Rolls-Royce of the bullion world. They are the gold standard of refining. If metal is moving, PAMP knows about it. And what did they say today? Did they say demand is soft? Did they say investors are selling? No, they said, and I quote, "We are seeing demand at levels we have really not seen before. Levels we have not seen before." Think about what that means. They have been in business since 1977. They saw the Hunt brothers squeeze in 1980. They saw the financial crash of 2008. They saw the squeeze of 2011. And they are saying that today, right now, in January 2026, the demand is bigger than all of that. They are running their foundries 24 hours a day, 7 days a week. They are paying their workers triple overtime, and they still cannot keep up. The backlog for wholesale delivery is now stretching into April. If you order a 1,000-ounce bar from PAMP today, you are essentially buying a future. You're buying a promise that maybe, just maybe, they will have a bar for you in 3 months. This is the reality on the ground. The physical market is on fire. The shelves are bare. The refiners are overwhelmed. And yet, the paper price on the COMEX is down. The price is $106. It is a lie. It is a blue screen of death for the financial system. The computer is telling you one thing, but the real world is telling you the exact opposite. This disconnect is the ultimate signal. When the price drops but the shortage gets worse, it means the price mechanism is broken. It means the price is no longer a tool for discovery. It is a tool for deception. The $106 price tag is a gift. It is the banks subsidizing your purchase. They are practically paying you to take the metal away from them before the whole system implodes. But you have to be smart enough to see through the smear campaign. You have to be smart enough to realize that when they tell you you can't sell your silver, what they really mean is, please, for the love of God, don't buy any more silver. This brings us to the final conclusion. We have the arbitrage vacuum sucking metal to China. We have the dollar collapse, destroying the denominator. We have the margin hike desperately trying to cap the paper price. And we have the refiners confirming that the physical market is completely sold out. There's only one way this ends. The rubber band is stretched too far. It is going to snap. And when it snaps, it is not going to be a gentle correction. It is going to be a violent overnight revaluation that wipes out anyone holding paper and crowns anyone holding metal. We need to give you the verdict. We need to tell you exactly what to do before the COMEX admits defeat. So, here's the verdict. We have laid out the battlefield map for World War Silver. We have shown you the arbitrage bomb, the $20.80 spread that is acting as a massive vacuum cleaner, sucking every available ounce of metal from the west to the east. We have shown you the dollar collapse, the DXY crashing below 96, proving that the king dollar is naked and afraid. We have shown you the margin desperation, the COMEX hiking the poker buy-in to $51,000 just to force traders to fold their hands. And we have shown you the refiner reality, PAMP Suisse confirming that despite the paper price drop, the physical factories are running hotter than they have in 50 years. The conclusion is not a guess, it is a mathematical certainty. We are in the end game of the dollar standard. You cannot have a market where the same asset trades for $106 in New York and $126 in Shanghai indefinitely. That is not a market. That is a crime scene. That spread represents the bleeding of the American empire. Every day that the spread exists, another 1,000 bars leave the Kennedy Airport vault and fly to Beijing. Every day, the West gets poorer and the East gets richer. The COMEX has backed itself into a corner from which there is no escape. They have two choices left, and both of them are fatal to the status quo. Choice number one, they admit defeat. They let the price go. They stop the suppression, they stop the margin hikes, and they let the price in New York gap up overnight to match Shanghai. If they do this, silver jumps to $130 tomorrow morning. The shorts are wiped out, the banks lose billions, but the market stays open. Choice number two, they keep fighting. They keep the price smashed at 106. They keep pretending the shortage doesn't exist. If they do this, the vault hits zero. The registered inventory goes to empty. And then they have to declare force majeure. They have to stand up and say, we don't have the metal. The moment they say that, the price of silver doesn't go to 130. It goes to no offer. It goes to a place where your dollars are no longer accepted as payment for real things. We are watching a game of financial chicken between the Federal Reserve and the laws of physics. Physics is going to win. The $20 gap must close. And it is not going to close by Shanghai coming down. Why would they lower their price? They are the buyers. They are the ones with the cash. It is going to close by New York exploding up. So this is my final warning to you. Do not get shaken out by the volatility. Do not let the $51,000 margin hike scare you out of your position. That hike is not a sign of strength. It is a scream of weakness. It is the sound of a central bank that is out of ammo. They are trying to trick you into trading your silver, the only asset that is flowing towards the highest bidder for dollars, the asset that is crashing against everything from the Swiss franc to a loaf of bread. Do not save dollars. Do not hoard cash. Cash is the victim in this war. The window to act is closing. Not because the price is going up, but because the metal is leaving the continent. China is buying it all. If you want to be on the winning side of World War Silver, you need to do what the victors are doing. You need to hold the metal. Let the banks play their paper games. Let them short each other into oblivion. You sit tight. You watch the spread. And you wait for the inevitable morning when the COMEX breaks and the true price of silver is revealed to the world. This is John A.G. The spread is $20. The vault is draining. Hold the line. Like, subscribe, and share.